Welcome to Channel's Business Global with me, Juliana Olayinka, from our studios here in London. Over the next half hour, we'll be looking beyond the business headlines by giving you in-depth perspective on the stories that are affecting all of us. Coming up on today's show, we'll be exploring the future of FinTech firms. With a slowdown in funding and a significant reduction in revenues, how will the smallest companies see out the coronavirus crisis? And the impact of COVID-19 on the mining sector is increasing as the virus accelerates throughout the African continent. Channel's Business Global has an exclusive interview with the CEO of the Botswana Stock Exchange for his take on how Southern Africa can bounce back post-COVID. Before those discussions, Simon Pusey joins me in the studio for a breakdown of the biggest business stories trending in Britain this week. Simon, great to have you back in the studio, albeit at a socially distanced space. UK GDP figures have been in this week. Of course, they were grim.
Yeah, so everyone looking ahead to this and thinking just how bad is it going to be. I think it's actually not as bad as a lot of analysts predicted. But Rishi Sunak, the Chancellor, has come out and said that it does look like Britain is in a really deep recession at the moment. He said that it's a significant recession and it's very likely that that's the case. The economy shrank by 2% in the first 3 months of 2020. Coronavirus, of course, forcing the country into a lockdown. And it looked like as soon as March hit, there was a real dip, obviously, in GDP and the number of sort of figures and things the businesses were doing. Analysts were actually expecting it to contract by 2.6%, so 2% isn't as bad as it could have been, but economists do expect an even bigger slump for the next 3 months. So obviously March was very, very bad, but nothing compared to what sort of April was like when it was really in its deepest stage, and things are starting to open back up now, but most of the economy is still shut down.
Gosh, I'm going to ask you about a topic we used to discuss all the time. Seems like we haven't discussed it for ages. Brexit. The negotiation talks have resumed,
yeah, feels
albeit via video.
Feels nostalgic now, doesn't it?
It does.
Those good days when we used to worry about Brexit, which was really seemingly sort of not that big a deal. But yeah, talks between the UK and the EU have restarted. This is the third round of negotiations before what is being described as a crunch summit next month in terms of the progress of these things. The last round of talks, the EU came out and said they were disappointing. The UK, slightly more positive, said they could have been better and they've accomplished a few things, but there seemed to be a couple of sticking points on things like fisheries, and there was sort of limited progress. Fisheries competition rules, police cooperation, those kind of things seem to be sort of sticking points between the UK and the EU. Both sides are due to decide by the end of June whether the current deadline for negotiating an agreement, this is a sort of full-on agreement, not really the trade things, but much more how the UK is going to leave, could be extended beyond the end of December. The UK says they will not agree to an extension. They do not want to go beyond the end of December, but at the moment, with the way things are looking like, you know, they're doing everything online. They're doing what we're all doing, which is Skype and Zoom conferencing. But the UK is saying that they're not going to agree to an extension, even if the EU requests one. I think that sounds quite unlikely, given how much other stuff that the government has on its plate. They obviously have a Brexit team, but I just can't see them making that much progress. Another interesting thing just around the subject of Brexit is that the UK is trying to negotiate a series of agreements, trade agreements, that will go through after the UK leaves the EU formally. And one of those that's just been announced this week is with Japan. So the UK is working with Japan, Liz Truss, the minister in charge of that, and they seem to be trying to get a deal that involves banking and clothing manufacturing as key areas which they're trying to open up market access in Japan. So it's interesting to see that while the world's crumbling around us, Brexit's still very much up in the air. There are these trade negotiations going on with people looking for sort of a view further in the future as to how the UK is going to come through this.
Well, thank you for that wrap up, Simon. Nice to have you back in the studio.
Thank you.
Thank you. Here's some other business news from across the globe. Saudi Arabia, the world's biggest oil exporter, has announced a series of austerity measures to reduce the economic impact of the oil price crash and the coronavirus pandemic. Once famous for being tax-free, the government has announced it's increasing its value-added tax from 5% to 15% and cancelling the monthly living subsidy given to the economically disadvantaged citizens from next month. The government's official foreign reserves dropped by $26 billion in March, the steepest monthly fall on record. Reserves now stand at $465 billion, down from the recent peak of $750 billion in 2014. Well, for more on this, I'm now being joined by Jamil Ahmed, the Global Head of Currency Strategy and Market Research at FXTM. These austerity measures, I presume they're telling us something that economists already knew.
Yeah, absolutely. Look, everybody is struggling in this environment worldwide. No matter where you are, you're dealing with the virus pandemic. But for those nations that rely on oil exports or oil-related revenue, this is double trouble. It's a double blow. And this is why the finance minister did warn just over a week ago of painful and potentially extreme steps that would need to be taken to help fiscal finances. And just over 1 week later, we've seen VAT in Saudi Arabia has been tripled from 5% to 15%. This is big enough as it is, because when you think of the Gulf, the GCC, the fellow countries, you think of tax-free, cheap operating cost of business. But having VAT on top at 15%, that's a big change to the business environment. Yet, for everyday people as well, who also work in the governmental sector, you now have the monthly allowances, which were towards $300 per employee each month, has also been taken away. So this goes to show what impact so far the conditions, the environment's having on finances, but we can still expect for more measures to come. There's been talk about whether the Saudi Riyal peg, a lot of the currencies in the GCC region are pegged to the dollar, whether that could be unleashed. I don't think that's very likely, because that peg's been in place for generations, and that would cause quite a substantial loss of investor confidence. But yeah, we are in unprecedented times where there's no real history to tell us what could go on. So there's definitely more cards on the table. But to see that, these measures are being implemented, and this is a very rich country, it shows to show what struggle low oil prices and overall pandemic environment is bringing to economies.
Absolutely. We're also expecting, we're facing something similar in Nigeria. But big changes, but some say not big enough. $112 billion of deficit this year. How can Riyadh pull this back? The austerity measures are not going to be enough. I know last year they tried to open Saudi up to make it a more friendly place to visit, similar to obviously Dubai. Not there yet. But are there other ways that the petrol state can dig itself out of this hole?
This is the interesting thing, because the 2030 vision that the Saudi prince unveiled when he took over some powers was that the Saudi Arabian economy in 2030 would be diversified, and it would look on a map as prosperous as Dubai has been over the past 15 or so years ago. So certainly there was aspirations to grow into a tourism hub, a business hub, an investment hub. But the indications are, as part of these measures, a lot of 2030 projects could be scaled back or paused indefinitely. So that's the sacrifice that they're willing to make. But you're completely correct. The measures so far of 15% VAT, which is triple what it was, before Monday, that announcement, and the government finances in terms of what it provides for locals in monthly stipends, this would only save 26 billion. So there's going to be more sacrifices to come. And let's not also forget that oil revenues too fell to only 34 billion for Q1. That's the crown jewel. That's the major cash cow for the economy. And it's becoming a little bit of a liability, actually, because the amount of cash you can get from it is nowhere near what it was before. So certainly that there's going to be more sacrifices that will be made unless this pandemic changes. And that's a health-related question. And even the health professionals, the most optimistic ones, do not think that's possible tomorrow. And we could only hope that it's possible in a couple of months. But even some would say that's unlikely too.
Wow. Gosh, 2020, what an economic year for history, for the history books. Jamil Ahmed, as always, thank you so much for joining us on the show. Just days after exiting an 8-week coronavirus lockdown, Parisians have been indulging themselves in the country's billion-dollar luxury goods sector. Non-essential stores reopened in France on Monday, and many hairdressing salons said they were fully booked as people rushed back for a trim. Without the tourists that usually flock to see nearby monuments, crowds were thin on the Champs-Élysées. The coronavirus lockdown cost the French economy 6% of annual growth. According to recent data, the COVID-19 outbreak has had a significant impact on FinTech financing. resulting in the worst Q1 since 2016 for fintech deals and the worst Q1 for funding since 2017. The evidence suggests that fintech firms are more vulnerable than their legacy banking counterparts, despite being better positioned for the digital transformation occurring in banking. Well, for more on this, I'm now being joined by Michael Simeon, the CEO of Vogue Pay, a global-facing payment processing platform. Are you concerned that fintech firms are more vulnerable than traditional banking system during the COVID-19 crisis? I know you are the owner of one.
All right. First of all, thank you so much for having me on your show, Julie. Yes, I think the concern is universal. The businesses are struggling, so therefore, naturally, fintech that's having those different kind of verticals will also suffer.
What are some of the ways that you can, change your service of purpose to cope in these unprecedented times?
Well, there are various things that fintech are doing already. For example, right, those fintechs that rely heavily on VC money will struggle a lot because you don't have many of those things around. But fintechs are providing solutions, agile like lending, providing more people who want to lend. Also, there's also a unique opportunity for a lot of fintechs right now because the condition itself of the lockdown itself, it means that there are more people online who are testing, who are trying to shop online for the first time. Therefore, that will increase the bottom line of fintechs. And thirdly, you also have fintech that are actually also doing disbursement. Now, the one that's doing disbursement, if you use the example of Square in America, they are the one that will be distributing all the palliative funds. We are also working with some of the government locally in Nigeria to see what we can do to assist them. But ultimately, I think that this creates, as well as experiencing challenges, it also creates a massive opportunity that fintech must not miss out. We're very excited about all the opportunity.
You're right about that massive opportunity, but unless you've got unicorn status, it is going to cost some money, and funding is pretty difficult at the moment. How are companies able to maintain their status during the pandemic and not go under? Yes, a lot of people are online. Yes, a lot of people, including myself, are experimenting with these one quick step solution companies, but that costs money, doesn't it, Michael?
Indeed. I think that it definitely depends on the model. Some, if you are in the remittance space, for example, most people don't have a spare money, so that space things will be quiet. If you're serving airline or hotels, also they're having challenges, so you will feel that on your bottom line. But you can also you don't have to have unicorn status to survive. What you need to do. You need to look inward, shred down, cut down all your excess, or what we call fat. Cut down the fat, haircut where you need to have a haircut. Go inside and start building from ground up. So therefore, the cost of running business, the way the fintech is set up anyway, the cost of running fintech is lower than the cost of running a bank. So fintech can use that to their own advantage. You have some customers who are now profitable. We've been serving for a long time and not profitable. You need to fintech need to relook at that strategy and see how, what are their core. Then fintech also, this is a time they will deploy machine learning, data-driven. Fintech are usually data-driven. So let the data guide you to the gold mine.
Oh, data guiding you to the gold mine. I'll bear that in mind next time I'm looking for some money. Michael Simeon, the CEO of Vogue Pay. Thank you so much for joining me on Channels Business Global. The international banking and wealth management group Investec have slashed GDP forecasts for South Africa by 50%. The corporate lender says the alarming deterioration in the economic outlook is due to the ongoing lockdown, which has proven to be one of the most restrictive in the world and hits at an economy that was already teetering on the brink of contraction before the coronavirus outbreak. Unless the government opens the economy soon, there are fears that half of the population could find find itself unemployed, and 54% of businesses may no longer exist at the end of the year. Coming up, I'll be speaking with the CEO of the Botswana Stock Exchange about how the southern African country plans to reopen its economy. See you after the break. Welcome back to Channels Business Global with me, Juliana Olayinka, from our studios here in London. Share prices of listed mining companies are on a downward spiral on the African continent. Commodity prices across the sector have been tumbling as the industry considers the devastating aftershocks of the unprecedented coronavirus global shutdown. Botswana, one of the world's fastest growing economies, relies heavily on diamond mining, and for the first time in almost a decade, GDP is projected to shrink by around 13% in 2020 due to the fallout from COVID-19. For more on this, I'm now being joined by Thapelo Tshole, the CEO of the Botswana Stock Exchange and a seasoned financial markets expert. Mr. Tshole, thank you so much for joining me on Channels Business Global. I want to talk to you, of course, about COVID-19 and how Botswana are faring. I'm sitting here in London, and this week, UK GDP has fallen by month, the worst that it has on record, 5.8%. Of course, it's all about coronavirus. How's it going where you are?
In Botswana, I think in terms of the GDP, the government expect or have projected the GDP to fall to about 13%. I think also is one of the biggest falls that we have had.
And why is that? Of course, I know there's a lot of focus, particularly in southern Africa, on the mining sector, and at the moment people just can't view exactly what they want to see, and the infections are really rising. Is it mining in particular that's causing the biggest issue?
Yeah, I think the biggest contributors to Botswana's economy are mining and tourism, and therefore with COVID-19, mining is projected to fall at about 33% because where the biggest accounting for mining is mainly diamonds. With COVID-19, we can't sell our diamonds because the diamond buyers can't come to Gaborone to buy their diamond, and therefore there have not been any sales this year. And then the second set of sailing, I think, is likely to be cancelled also. So that leaves a fall of about 33% in terms of contribution to GDP. And also with regard to tourism, it's obvious there are no aeroplanes to travel. The COVID-19 have stopped everything else, and therefore we can't receive tourists. And this basically means that those two major contributors to the economy can't contribute anything.
Tourism and West Africa don't go hand in hand. It should be, but we're just not as advanced as you are. How worrying is this? Because, of course, I know that you guys are starting to open, but so many are not. Do you think the government are worried about letting others in, or the customers are just not going to come?
Yeah, I think it's a combination of both. A combination of both in terms of the other service providers also associated with tourism. People need airlines to be operating for them to come here, and definitely there are not a lot of airlines operating. And actually, in Botswana specifically, they have closed the borders. Airlines are not permitted to land, and therefore no one can actually visit even the tourism areas. So that is the first aspect. The second aspect is that, I don't think anyone really will be willing to travel for leisure that far at this time. I think the tourists will not be very comfortable to come or to travel in these times of Corona. So that is the other contribution. But the third contribution is what you stated when you say, even the tourist companies themselves have closed up. They are not ready enough to receive tourists yet.
They're not, aren't they? I want to talk about some of the stimulus measures that the government may or may not have put in place. The airline industry is tanking at the moment, but British Airways, here they've put about 30,000 of their staff on the British government furlough scheme. So the government here are paying up to 80% of their wages to the tune of up to £2,500 a month. Is that happening in Botswana? How are you able to keep the economy ticking over at this time?
Yeah, I think Botswana, fortunately, unlike other African countries, Botswana has been able to build foreign reserves over a number of years to prepare it for disasters like these ones, and therefore the government is able to offer some salary incentives to companies that are paying 2,500 pula for employees, in pula terms, of course, to people who are employed in the companies that are registered to pay tax. And also companies, the tax authorities have also deferred about 75% of any two quarterly payment between March and September 2020. And also some of the repayments in terms of the tax have been deferred to 2021, because we are talking about a situation where companies need liquidity, they need cash. And also there were some levies that the government have waived, so they're not going to be levied. So this also is one of the measures that is going to give the much needed relief to the companies. Majority of the companies have already benefited in the last month for payment of their employees from government. I think even this month, the expectation is that employees are still going to be paid.
Wow, that's a thorough measure there. Hopefully, something that we can see replicated in other parts of the continent. Mr. Tsholo, you're the CEO of the Botswana Stock Exchange. In every downturn market, there are, of course, losers, but some winners. Of course, the tech firms around the world are doing amazing at the moment, particularly the likes of Zoom. Who are the biggest winners in Botswana? What's doing really well and bucking the trend at the moment?
Yeah, I think for us, surprisingly, we have a micro lending company. On year to date, its share prices have increased by about 17%, and also the diamond related company also increased by about 8%. And also we have the retail companies. I think the retail companies are seeing an increase in their share prices and in terms of trading. But this is mainly because one of the things that government have decided to do is to give majority of the population some food basket over the past few months. I mean, this last month, and the food baskets are going to be continuing this month. They are out of the COVID fund that the government have set up. And I think a majority of the purchases are actually from the retail stores, and those retail stores are listed entities. So they tend to be some of the greatest beneficiaries of the pandemic, if I may say that.
We're running out of time, but I can't let you go without asking your opinion on this. Of course, you're a senior economist, and I know economists do dip into geopolitics at the moment. There's been some pretty grim projections that have come from some of the big institutions like the European Union, the United Nations, the IMF, about just how bad the coronavirus could hit Africa, killing millions, costing billions. That's not yet happened. Do you think the wave is still coming, or perhaps, sometimes people are a little bit too presumptuous of our failings? How do you think Africa has coped? Do you think it could get worse, or we perhaps have seen the worst of it?
Yeah, I think if we're to make comparatives in terms of what is the best thing that Africa have ever done compared to developed countries, is COVID-19. I think so far we have handled it so well in Africa, far much better than a lot of developed countries have handled COVID. And generally, of course, it will affect us economically because of the linkages that we have with developed countries. Sorry, but in terms of the effect, in terms of the death rate, in terms of the infections, I beg to differ. I don't think we'll be in a worse of positions like I see what is happening in Europe and in America. And therefore, I think if there's something that we have handled so well in the creation of mankind, since the creation of mankind, better than European countries, is COVID-19.
Mr. Thapelo Tshole, I think a lot of our viewers will agree with you. Thank you so much for joining me on Channel's Business Global. And when you're in London, make sure you do indeed stop by and see me in the studio at a 2-metre social distance.
Yes.
Thank you so much. Well, sadly, that's all we have time for today, but do get in touch with your comments and suggestions. I'll see you at the same time next week for more in-depth business analysis on Channel's Business Global. Goodbye.